Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. Well, action again, it's not really very significant. Today we even do not need the daily chart. Mostly we could keep an eye on what's going on the lower time frames. So on the 4-hour time frame chart result on the Fed statement, you can see market shows the bounce down from this trend line, and currently still stands inside of this range, as forming kind of the triangle or something of that sort. You could plot probably as the symmetric triangle. So you also could plot some kind of this type of the triangle as well. So anyway, it's kind of the consolidation, and here is what we would like to get actually that we discussed. If the market will appear somewhere around this area, this would just great. Currently it seems that both scenarios are possible. This market could show minor drop inside of the triangle and then turns up and shows the upward breakout. This is possible, especially because on the euro currency the price action, as we discussed today, suggests possible upward continuation. And just to not keep the opposite directions on the gold and the euro, we should be careful, because as a rule, since both of them are traded in relation to the United States dollar, it seems that for the both markets currently the same driving factors exist. And although we are like to get gold around this area, we should be extra careful with this price action that we have. And currently it seems everything by far is okay. This market stands inside of this range, showing bounce down, this pullback, and theoretically we could consider some A, B, C top pattern downside continuation. But be aware of upward action or returning back to this top. As soon as market will move closer to this top, it could mean that we should be ready for an upward breakout. That is based on the pattern that we have on the hourly chart. So take a look. Here theoretically, we discussed actually this yesterday. So here theoretically we could get a kind of the hand and shoulders or something of that sort. And market right now is forming right arm, and we said as soon as market will approach to 1950 area, that could be the area where we could consider possible taking the short position. At least this will be relatively safe opportunity. Currently, market could climb slightly high, because if you will consider this A, B, C top, very steep ABCD pattern, you will see that OP stands slightly above this area. But anyway, that doesn't change the core. This is just minor detail. So somewhere around 1958, 1960 area, this will be the point where market should reverse down. Because, I mean, if we consider the scenario of the downward continuation. Besides, here is some kind of the double top consolidation or something of that sort, and it's preferable if market will just stack somewhere in an area of the neckline and then turn to the downside. That's how bearish market should behave. If instead we will see upward breakout here, upward continuation close to the top, well, in this case it would be better to not take the short position, because that could be the first signs of possible upward breakout. In general, overall situation of this downward continuation looks a bit tricky, because on the euro currency we today discussed the possible upward continuation. Well, but depending on what market will be faster and what market will be slower, this probably could be combined to these things, because if euro will show the faster action, then the gold, it could complete the target. Gold in terms of this action could coiling around this area, and then they together could turn to the downside. It's also possible, but still some risk moments exist with this trading step. So that being said, if you would like to go short, you could consider this pattern with the stop somewhere, I don't know, maybe 1965 area, for example, something in this area, and move stops to break even as soon as possible. Potentially, if indeed market will continue move to the downside, nearest target will be around 1940. This is OP of this head and shoulders pattern. Conversely, upward breakout and coming close to the stop tells you that This would be better to not take any shorts, and market could start in preparation for upward breakout. Because in this case, on the 4-hour time frame chart, we will get early reversal in the middle of the triangle, returning it back up to the resistance line, and this is clear classic signs of the bullish breakout. So that's the moment where market should set the short-term direction. Either it will be downward continuation or it will be breakout, and we could get even further upward direction on the high time frames, on the daily, on the weekly chart. So that's the situation that we have on the gold.